These are all the trades that I called last week. You can see last week after fees and commissions, it was a $95,000 week, and it was just a couple simple trades. So there was only 4 setups last week, roughly 1 trade per day. I've worked with 4,500 clients over the course of the past 7 years. I kind of know where all the problem points are. I found that simplicity and risk management is really the only 2 things you need to focus on in trading. You might be doing a whole bunch of other things that don't make any sense whatsoever. Let's break it down nice and simple. That way you can see how to keep it very, very simple. So this was the first trade that I called last week in my group. This trade was actually based on the 4-hour and daily chart. Here was the reason I took this trade. Here on the daily chart, or GBP AUD, there's this major resistance zone right here. And all I use is support and resistance. I don't use anything else in trading. It's just support, resistance, and then some price action analysis. What I saw is price was coming off this resistance zone. So my simple idea is that, I thought that price might be heading down here to this next zone. So then what I did is I went to the 4-hour chart. I saw that price was coming here into this support zone, and it looked like it was going to break it. We've got a lot of bear candles going down from this area. We were making nice higher highs and higher lows, but then when price came up here, it made a higher high, pulled back, tried to make a new higher high, but didn't. It actually made a lower high, failed there at the resistance, broke the recent lows, and now we started making lower lows and lower highs. So what I thought right here, I thought that price might be breaking below this zone. I simply entered a sell here at this zone. I put a stop loss just above the zone, and I had a target of a lower low. Sometimes I'll use 1-to-1 risk reward ratios. Sometimes it's 1-to-2. Sometimes it's a little more. Sometimes I'll close trades early, whether it's at break even or a small profit or small loss. And I just like to structure things really, really simply. That way I can let my experience kind of dictate some of the decisions. I have a little bit of trading rules, but they're very, very simple, like use support resistance. Do I think it's going to break past it or bounce at it? I control risk. I put a stop loss on the other side of the zone, a risk and amount I'm comfortable with. But past that, I don't put too many rules into my trading approach, because what I find is when you have too many rules, for one, things are not that simple. You have a lot of criteria you have to scrub through for every single trade, and you can also filter out a lot of pretty good trades just because the rules get in the way. And the second thing about having too many rules is that you experience something called rule fatigue. And it's where you have so many rules that it really gets in the way of you being able to use your creativity and your discretion and your experience in trading. I don't put too many rules in place. I just keep it real simple. So again, on the daily, I think price is going to go from the resistance maybe down here to the support. What I noticed is that price looked like it was going to break this zone, so I sold. That's where I called this trade out. You can see I'm selling right there at the support, thinking that it might break through. And in this case, I had a 1-to-1 risk reward ratio. So it would have looked something like, maybe like that. So what happened is price broke below the zone, and it went into profit. It almost went to the profit target, and then it started going back up, started rejecting. I held on to this trade, and then as it started going up right here, what I noticed is that, okay, we broke below the zone, then we came back up here into the zone. We tried to reject a couple times, but then we had some candles looking like they were going to be going up into the zone. So what I elected to do is I was like, okay, if this was going to go, it would have gone right there to the profit target, or worst case scenario, if it was going to be easy, it'll pull back, quickly reject the zone, and then go down. So what I elected to do based on the price action was to say, this trade doesn't look like it's really playing out. So I decided to close it at around break even. It was technically a small profit. And I'll show you that here in my group where I called it out. I said I'm short. I was risking $40,000 on that trade for about a $40,000 profit. I extended the profit target even lower. And then this is where I closed. I said, I'm clowning GBP AUD here, but I'm closing GBP AUD here. And you can see I closed it right here. This is what it looked like the moment I closed it. It looked like price was making higher lows, and it wasn't really bouncing at this resistance zone. So for the time being, I just elected to get out of the trade there. And you can see I still made about $8,000 profit after fees and commissions, probably $7,000. So then what I did is, since I thought that price might be breaking above this zone, so I entered a buy. I put a stop below all the recent lows, and then a target, just a pair of a 1-to-1. And again, sometimes I'll extend it a little bit further if it looks like it's going to be going a lot further. And you can see that was the trade right there. The account was sitting just over $300,000 in the balance, and I risked only $15,000 on that. The dynamic risk just kind of reflects how comfortable / confident I am in the probability of the outcome actually occurring. So if I think it's a really high quality trade, I'll risk more. I'll risk $20,000, $30,000, $40,000, $50,000. If I don't think it's as high probability, but it's still a trade worth taking, then I'll take the trade, but I'll just risk lower. I'll risk what I'm comfortable with given that trading opportunity. You may notice that sometimes when you're trading, you have a trade that you really feel strongly is going to work out based on your experience. And whenever you have enough experience, you can use that discretion and that intuition to make decisions that allow you to make a lot more profit when you're right versus what you lose when you're wrong. Because the only way that you really make a lot of money trading is by making more on your winners on average than you lose on your losers. If your average loss is $5,000 on a trade, but your average win is $10,000, that's great. right? And you don't have to stick to just fixed stop loss and targets. You can set your stops and targets as a way to kind of control the parameters of the trade, but then you can manage that trade dynamically based on the price action. Generally, trades that start going into profit immediately, those should be held, but trades that start kind of messing around and floating around at break even or small loss, small profit, or even going towards the stop loss, a lot of those you can actually get out early. And even if you don't get out early, if you're closing them at like a positive risk to reward ratio, like a 1 to 2, say, for example, then that means you're still making more on your winners and you're losing on your losers. And then you can see that after I got long, within the next candle or two, it actually started like pulling back. So we had strong rejection. It started going back down. So what I elected to do is to say, okay, I think this is actually going to go down now. So I exited the long position, and you can see that, so to exit, and then we'll talk about the next trade in a second. So this next trade I took was right here, right? And the stop loss was underneath these lows and the target was just up here at like, 1 to 1 risk reward ratio. This was essentially just me thinking that price might break through the zone. So as you can see, this started going down, and then I had closed the trade, before the stop loss, maybe like right here, whatever it was. You could see that it's all there in the screenshot. So that was the second trading opportunity. So far that week I had 1 win and then 1 loss. You can see the loss right here was $3,500, right? So small loss. So I have entered the short position again. This is when I went on GBP AUD. I had re-entered the short position. You can also see I decided not to set a take profit. So why did I re-enter the short position? The very simple reasoning is that I thought that since price started bouncing at that zone, I thought that it might be going back down, right? Because it had broken below, went to profit, came back, retested, thought it would break above the zone. So I closed my short, I entered a long, but then it started pulling back away from the zone. So I thought, okay, well, maybe the long's invalidated now. I just got out of a small loss and got back into a short position. So that short position started going into profit. The risk was 45,000. And I held this trade for about a day. And as it started going into more profit, you could see where my entry was. The stop was just above the highs of this little support resistance zone. Every time I enter a trade off of support resistance, whether it's a breakout or whether it's a bounce of a zone, I just put a stop on the other side of the zone. Not too close, but not too far. I elected to close it right there. And again, this was $45,000 of risk. So it was about a 1 to 1.5 risk reward ratio. You can see the account went from 300,000 to about 370,000. After fees and commissions, it was just under 70K of profit. So far that has been 1, 2, 3 trades. These were all the trades I took on GBP AUD this week. And then the last trade was I took yesterday, which was Friday, and it was on USDCHF. What we'll do is we'll go to the USDCHF chart. We'll break this down nice and simple. Price was at this support resistance zone. We had a set of lows right here. What I had noticed right here is that's the major zone right there, but the more recent zone was right here with these little highs and lows, right? So perhaps this zone could be adjusted. But I thought that since price had broken below it and come back to retest it, I thought that it might go down from this zone. So what I elected to do is when price was there at that zone, quite simply put, I just sold at the resistance. I put a stop loss above the zone. And my target, I didn't set a hard target because sometimes price will start going really fast in the profit. Sometimes I'll close it earlier or hold it. So I got short on USDCHF, and it was a $40,000 risk. And then you'll see this is where I elected to close it. It went into profit really quickly. There's a couple reasons I closed it. Number one, since it went into profit so quickly, oftentimes you'll see a lot of like price movements just like snapping backwards, like after you have a really volatile move in one direction. It's just the mean reversion characteristic of Forex trading. When things go in one direction pretty quickly, sometimes, and in my case, more often than not, you see it kind of like retrace pretty quickly. But the second reason, which is the more important reason, is that this was about midday yesterday. What I wanted to do is I wanted to be out of trades for the weekend, because since I'm risking so much, even small spreads and gaps, it can cost me tens of thousands of dollars. So since it was Friday yesterday and the market was going to close, I just decided, you know what, this was a profitable trade. It was a profitable week. I'll just decide to close it there. So this one was closed at a negative risk to reward ratio. This one made, let's just look at it. So 13 plus 13, so about $26,000. So in this case, I had one trade where it was about like on GBP AUD, it was like a 0.25 winner. Had another trade that was about a 1.5 winner, and then I had this trade which was about like half of a unit of profit. Right, so it's like 0.5 R. So a little over 2 units of profit on the week if we're factoring risk. And with just that, with just these simple trades, this first setup, second setup, third setup, and this final one on USDCHF yesterday, the fourth setup. These simple trades represented a $99,000 profit before fees and commissions, and then it was a $95,000 profit afterwards. And that's all the trades I took last week. Very, very simple. Now I'm looking to take more trades this week because there's a lot of really good trading opportunities in the market right now. But here's what I want to highlight. A lot of the stuff you're doing is probably things that do not really matter. And you're also probably doing those things that do not matter at the cost of things that really do matter. What I've taught for years is that the only things that I think really matter in trading is keeping things simple and controlling risk. When you look at it logically, if you do those two things, if you have a very simple trading approach, that's essentially just saying, do I think it's going to break a support resistance or bounce at a support resistance? You don't really have to play a lot of mental gymnastics. You can look at the chart and you could say, I think it's going to go up or down. And then by using support resistance, that level of simplicity allows you to buy or sell at a support resistance zone. And then you just put your stop loss on the other side. And then you use a lot size where it reflects whatever risk you're willing to risk on a trade. Maybe you want to risk $1,000, $3,000, $5,000, $10,000, but that allows you to structure things in such a way that it is very, very simple and you're still controlling risk. And then you let the outcomes play out. You manage it dynamically based on your discretion. Everything works out in the long run. You'll win some, you'll lose some. There's some weeks I win less than half my trades and I still make a profit. There's some weeks where I lose like 80% of my trades and I end up taking a loss on the week. It's a small loss compared to the profits from whenever I have a win streak. So if you're struggling with this, I can help you structure all this in such a way where it doesn't take you very long. Like really, we only need like 1 month. And if you want, I can help you for 2 or 3 months. You and me will set up a trading journal in Discord where it essentially just looks like this, right? Where you just post all the trades you take in Discord. And then what happens is me and my team, we will go into your trading journal every day here in Discord, whether you're back testing or whether you're just posting your live trades with the trading view links. I can actually give you feedback every single day, me or a member of my coaching team, and we'll set things up in such a way where you make quick progress and you get feedback every single day. Literally 1 month is all you need. And I can help you completely restructure everything about your trading. And since you can take a lot of trades in back testing, what we can do is we can give you instant feedback. So that way you don't have to learn all this stuff like I had to over the course of it was nearly 2 years before I got profitable. And I didn't have a mentor or a coach or anybody to help me out. Had I had somebody working with me, it would have taken me probably only a couple months to be profitable from the very beginning, because I would have known what is important to focus on, what's necessary, and then more importantly, what's not necessary. Because honestly, if you just know what not to do, and you can start kind of changing the trajectory of your trading decisions in a way that is positive and conducive to profitability, you just need to know a couple core, very basic, fundamental things. And if you just do those things and nothing else, by definition, you're going to be profitable. Because if you're making more in your winners versus what you lose in your losers, then yeah, that's a profitable trading approach. What I'll even do is I record videos with the people that I work with. I'll screen record videos that are 5, 10, 15, 20 minutes long sometimes, going through their trades and showing them specifics about what I think would make their trading approach better and what not to focus on and what to change. What the people I work with can do, what they can do is they can instantly tweak that and optimize it. And then they go through the next set of trades for the next 1, 2, 3 days. Then me and my team can give more feedback, whether we're typing in the Discord server, whether we're sending an audio message to you, or whether we're making a little YouTube video screen recording showing all the trades you took and our thoughts on it and how to optimize it. And it allows you to make really, really quick progress. If you'd like me to help you with this, to just show you how you can take really, really simple trades doing this exact thing that I've just showed you here, then what I want you to do is click the link in the description. It's going to take you to my website, and on my website you can learn more about how I can help you. And then what you can do is you can actually just apply, so that way we can screen you and see if we can help you. A member from my team will reach out to you in an email to set up a call. And then they'll interview you on that call to see if you're a good fit. And then you can come on board. And then literally the first day you start, you can immediately go in and start getting help. Meaning you can do a back testing session. I have a video inside this program. It's just one video. It's not like a whole course with a bunch of other stuff. It's just one video and it's 2 hours long. It takes most of our clients usually a day or two to watch it because they're taking notes on it. It shows you every single thing in detail with exact step-by-step directions on exactly what to do. Nothing is up in the air. And if anything is up in the air and you don't understand anything, you can get unlimited one-on-one help from us, whether it's Discord messages, audio messages, screen recorded videos we make for you, or even just hopping on one-on-one Zoom sessions. I make myself available for everyone who works with me for a whole month, as much as they need help. We can hop on calls, even if it's just 5 or 10 minutes. And then you take that information, you can optimize it going forward. We give you more critiques and more feedback. Instead of you going kind of sideways and plateauing in your trading journey and not making any progress and remaining either consistently losing or break even, after the 1 month coaching is over, you'll have that Discord server with all of our feedback and all the notes in there. So it's like a whole record of everything. That way you can go back, you can watch all the videos we send to you in there going through your trading journal. We give you all the tips, all the feedback, all the suggestions that we think could make your approach better. And you can watch how quickly your trading journey can can completely shift. You are just a few sets of decisions away from being profitable. All you have to do is you just have to know exactly what's important to focus on, because we know we've done all this ourselves. We have all our personal experiences, and we have the experiences coaching thousands of clients who do the same thing. Click the link in the description, head there. You can apply for it on my website, and hopefully we'll be able to work together.